Mr. Venu Srinivasan joins us, Chairman and Managing Director with the TVS Motor Company. Mr. Srinivasan, fantastic to have you back on ET Now. Tell us more about your EV scooter foray. What prompted you to launch an EV model? Because some would argue that you are a large player in the EV space and you may be cannibalizing your own product offering. Because earlier we saw electric two-wheeler launches spearheaded by new players, startups, and now suddenly an incumbent is coming there.
Well, I think we are not the first. Bajaj has already launched their scooter, and I think more players will come in. We see by 2030, in a 10-year horizon, maybe 35% of two-wheelers being electric, particularly those that run in state capitals and metros, mini metros. So we have to prepare for it. We have to have an experience curve. We've all had more than 30 years of experience in building, designing our own petrol two-wheelers. Therefore, we need to have similar experience in designing our own batteries, our own motors, and the connected vehicle. Today, a two-wheeler, electric two-wheeler is not about a battery and motor. Anybody can put a battery and motor together. They are standard components. But how do you make an iPhone on wheels or an Android on wheels where a customer has complete connectivity for everything that he does, similar to a smartphone today?
About a 10-year plan, and are there any more products in the pipeline where you see in the EV space? What are the key tailwinds and encouraging incremental entrants in the EV scooter segment?
First of all, as I said earlier just now, we are looking at a 10-year perspective and gaining 10 years of experience in building, servicing, supporting connected vehicles. And connectivity is the most important part of it. Think of it as your smartphone with wheels rather than an electric scooter. So we need to build capability in software, writing thousands of lines of code which will connect the vehicle with the customer. And therefore, we're looking at a 10-year horizon and not what we're going to do tomorrow.
Okay, pricing at just over $1 lakh is quite competitive. How does TVS expect prices to evolve once more players and models come up, and also with better technology and efficiency in the EV space?
Who did this question?
First of all, this price is really for gaining experience. It does not cost-based price. Today we will not make money on these scooters, but we want to gain experience. It's an investment for the future. But in 5 years, 7 years, whatever time frame it takes, you will have non-lithium batteries coming in for sure, and even lithium may come down in price. So we have to see batteries drop 50 to 75% over 10 years, at which point you will suddenly find that it makes eminent sense to have an electric vehicle.
What's the status of BS6 migration? Are you on track to meet the deadline? And how many of your models have already made the transition?
We are very much on track. I think practically next month, which is February, we'll only be making BS6 vehicles. And by end of February or first week of March, we'd have run out all the BS4 vehicles from the dealerships into the market.
Right. Mr. Srinivasan, you know, in the adverse inventory now behind us, what's the level of inventory at the moment that you're sitting on? And by when do you see the end demand recover?
Overall inventory, we don't have much of a problem. Our company has always been very tight on inventory and make sure that it does not exceed 45 days.
Right. Two-wheelers have seen a very sharp cost increase as well due to the changes in insurance norms and tighter safety norms. The cumulative cost hike faced by customers has been in the range of about 8 to 12%. Now with BS6 kicking in, how do you see pricing trends play out, and how is it that you see demand to be to really pan out this year?
I think it's more like 20% a year actually rather than 8 or 12. It started with the BS4 journey, and then you had the 5 years of insurance that was mandated by the Supreme Court. ABS came in on vehicles above 125cc. Now with BS6, I think the customer is really reeling from sticker shock. And the solution to it, I think, is to reduce GST on two-wheelers to 18%. Because anyway, all our prices have gone up, so government won't lose revenue. And at the same time, the customer will be compensated. There is really a common man's product like this being charged the same as a car or a luxury product at the highest level of GST does not seem to be just.
All right. Now, experts believe that over the next 5 to 10 years, the rise of demand saturation looks imminent in the two-wheeler space. Tell us about the scope and the key trends emerging in the two-wheeler sector for this decade, and what are the disruptions taking place in the industry, and how are the OEMs trying to stay relevant?
First of all, our penetration in rural markets is still very, very low. So to say that in 5 years, I don't think so. Maybe in 10 or 15 years, saturation will be reached. But our major export markets, even lower than India. The penetration is even lower than India. So we will have great opportunities to grow globally.
And amid the cyclical versus structural debate, what do you think the factors are responsible for the impending growth in autos and especially two-wheelers?
I think the main thing that's impeding growth is consumers don't have money. We need to have a major cut in taxes for middle class. People earning less than 10 lakhs or 15 lakhs or 20 lakhs, however much you want, wherever you want to define it, so that put money in their pocket so that they will go and buy cars and houses. Give a subvention on small houses, less than 700 square feet or X lakhs of rupees. Make sure the interest can be taken as a tax deduction. So there are many ways in which government can actually kickstart the consumer, and that's what is required.
You know, an industry insider recently expressed his angst about over-regulation killing the industry, saying there's little hope from the budget. R.C. Bhargav also expressed his views on addressing the economic slowdown with long-term planning, which he said was lacking at the moment. What's your assessment, and what are some of the issues that need the government's immediate attention?
We need employment to pick up. We need MSMEs to pick up. And I think the major thing that MSMEs suffer from is lack of credit. We don't have an active SIDBI that we used to have, Small Industrial Development Bank. For small enterprises, whether it be a chai shop or whether it be a small retailer of fast food or an industry, they need to get quick access to funds. Today they start accessing funds and then suddenly it dries up because bankers are afraid of lending and of NPAs. So we need to create a robust system to support micro, small and medium industries.
Right. So what are the key demands of the industry? What would you like to hear from the budget?
I don't look at a corporate tax cut. I think an NBFC push, creating an active long-term bond market. So I can go and take 20-year or 30-year bonds to build roads and not create a problem where NBFCs are lending for roads and taking 1-year and 2-year loans and funding 25-year loans. This structural deficit is part of the problem that we have in this country. So we do need an active bond market, and we need long-term bonds being available to infrastructure companies, whether it be power, commodities like steel, aluminium, or roads and ports.
Okay, Mr. Srinivasan, thanks so much for taking the time out and speaking with us today. And here's congratulating you on being chosen for the Padma Shri Award.